Hey guys, what's going on? Coming at you with a late night video here about basically what the market did today. The buys I made a handful of buys. Per my previous video, I was roughly 35% cash. I did actually deploy my cash down to about 30%. So I deployed about 5% of my cash in the market. We had a NASDAQ correction of basically 10%. S&P was well past 5%. So normally when that happens, mind you, this doesn't happen often. There's just peak fear with the tariffs. They went in place at midnight today, and there's a lot of uncertainty, fear, chaos. The VIX went above 27, 28 for a hot minute. Uh, Justin Trudeau spoke today about, basically what we're doing and kind of placing his side. So there was just a lot of Trump was in the news, Powell was in the news. A lot of analysts came on CNBC today and kind of voiced their opinions. But regardless of your opinions, how you feel about that stuff, it is what it is. Policies come and go. Doesn't really matter. I mean, if you look at the fundamentals of stocks and really what you do as a long-term investor is you just buy when it makes sense. Like when the valuation makes sense, you buy. When the valuation's frothy and high, like a lot of stocks were late December, January, early February, you take some profits, you take some chips off the table, and maybe you don't fully leave the position. I really wish I was doing videos in January and December this year because I personally, even though we're not out of the correction and we're not going back to all-time highs yet, I do think I really, really did it as well as I could. I'm very happy with what I did. I took some chips off the table, didn't totally leave my positions, cashed up, prepared for something like this. So I'm kind of happy with where I'm at, and I feel very calm. If the market goes down more, great. If it doesn't, then that's fine. Also, I'll have still a heavy cash pile, do my daily buy or my weekly buys, excuse me, and keep going from there. So some stocks I did buy at open. The market really sold off violently this morning because people were freaking out. I bought some AMD. That position is fully built right now. I'm just driving down my cost base. I bought it like $99, $98 today. Pretty decent sized buy. It's roughly now 12, 10% of my portfolio. Don't like really going over 10, but when deals are like screaming where I don't think, getting AMD under 100 is a gift in my opinion. I really think under 140 is a buy, but under 100 is crazy. Like to me, like it's set up so well for the next couple of years. People are going to look back and be like, "Wow, remember when it was under $100?" So, I think that's really going to happen. I did also buy some Target. That is about 75% built for me. It's a position I've owned for a while. It's just a nice dividend play. The Target earnings, they pulled back forward guidance, low single digit growth. They actually shouted out ELF in the earnings call, and basically we're talking about how a lot of their stuff comes from overseas and the tariffs and all that's implemented. It's gonna raise pricing. Sure, that's gonna happen everywhere, but then people need to eat. People are gonna figure it out. Every single time something like this happens, like COVID's a perfect example. The American consumer just finds a way, and it's really relentless. It takes a lot for the American consumer to like really just like go belly up, in my opinion. So that's kind of a thought I have when people overreact. They'll kind of panic sell and then really let the dust settle and really think about it, let it process in, and then it usually 9 times out of 10 goes up. So Target was another one I bought today. My cost base is 104, 105. I think it cracked under 120 today, so I really like it under 125, even like 130. I really like it at on a valuation basis. Anything under a sub forward 20 PE, I really, really, really like. If it gets to low teens, I'm gonna buy very aggressively. Probably fully build it out at that point. So I do like that one. So I bought AMD. I bought Target today. What else did I buy? I bought a couple. I bought Google. Google's a great stock. It's just not fully built out like my Palantir, Nvidia, Meta, AMD. Like those are all very large. Shopify. They're all very large positions of mine. So you could argue Meta's a decent deal, Shopify's a decent deal, but in my portfolio, it doesn't make sense to add anymore because they're already fully built. I don't want to get overweight. So I did buy some Google to kind of, I think, I don't know how to really explain it. I'd like the position. I'd like the position to be bigger, and I saw a good opportunity to buy right now. I don't know if it's going to be the best ROI in the next like 12 to 24 months, like AMD or something like that. But just a little safety and just a sleep good at night stock that I feel like is a really good deal. I just wanted to buy more of that. I bought some Nike today, and then I actually bought some more Elf. So my Elf position is actually getting crushed right now. I started buying around $70, $71. It went as low as like $62 today. That's crazy. Mind you, a couple months ago, this stock was like over 200, which is crazy to think. So if you were buying it like 180, 200, a nice little 20% pullback in the stock, I mean, you just got completely annihilated. So a lot of Elf's products, or if not all, are made in China. So obviously with the added 10% tariffs on, the thing is in the makeup industry, especially Elf, it's a high quality, lower grade. No, I rephrase that. Well, let me rephrase that. It's a high quality makeup for the cost. So all the Estee Lauders and all that undercuts all that. So I think it's positioned really well right now. People are scared, like at the end of the day, and this is my opinion, females and the makeup and consumables like that, people, it doesn't matter if you're broke or not, you will find a way to get your makeup. That's the bottom line. That like bottom line, like makeup will never just like be, oh, I'm not going to buy makeup this week because I can't afford it. Like, no, that's almost basically, it's not an essential, but it's treated like an essential. So getting it at a $62, $65 per share cost right now, I think is a steal. If tariffs get reversed or the Fed makes some cuts, Jerome Powell spoke today saying, oh no, we're going to do, actually on my, I don't know if you guys follow me on my X, it's just my name. So you could probably find it. But anyways, a couple weeks ago when the Fed announced, oh, we're gonna go ear by ear, and the U-turned on, oh, we're gonna get data dependent, and then oh, we're not. They're just jumping around. Oh, we're stopping forward guidance. They're just playing games with everyone. But they came out today and said, hey, instead of doing one cut this year, I think we're gonna probably do three. We're gonna do a June, a July, and September one. So personally, I literally, when they said one cut a couple weeks ago when the market was popping off at all-time highs, I literally said, I guarantee you that we're going to do way more than one cut this year. I actually think I said three or four. And that's kind of playing out exactly how I thought. Everyone was just too euphoric on the election, on the inauguration, on momentum. Oh, things are great. If the current administration is very volatile, and you're going to get a lot of U-turns, a lot of changes. We're still in warm-ups. I mean, he's only 4 to 6 weeks in his term, and he's just ruffling some feathers right now. So I think a lot of people on Wall Street, they forgot what it's like, or they're used to 4 years of something completely different where it was very calm and predictable. But in my opinion, if you're cashed up and you know what to look for, there's a lot of opportunities here. So, and I think there's going to continue to be. So it's a shame because most retail people, they get very frustrated, they get scared, they buy out, they don't know what to do. And then they lose, like, I don't want to say life-changing money, but I mean, they could put themselves in a different tax bracket. I truly think that. And then you start gaining momentum and you can go from there. So it's a shame. But yeah, I mean, if you like this channel, like my thoughts, I'll continue to tell you guys what I buy, my recap. But yeah, I think the Fed's going to cut more than 3 times. I don't think tariffs are going to be super long. I think there's going to be a lot of negotiation and a lot of arm bending here, and then they're going to get U-turned or lessened or negotiated or figured out. So the market's going to feel better. Volatility is going to go down. The Fed is going to see more cuts this year than what people think, and Wall Street's going to be offsides there. There's still $7 trillion in government money market accounts. People aren't talking about that right now. I do understand not all of that's going to go into the market, but even if a quarter of it goes into the market, mind you, pre-COVID, we were $3 trillion. So just say $2 trillion of that money goes in the market. That's a lot of money. And especially if you're going into the dividends, beat down stocks, stuff like that. Like, I don't know why Wall Street always gets hung up on all these crazy negative things. And I mean, you could look at it the other way. I really think they want to shake retail out right now, and I think they're successfully doing that. But in reality, you should be very I feel like I'm in control. So, yeah, that's kind of my thoughts right now on the market. I'm going to continue to buy. I'll make a video maybe tomorrow, depending on how volatile the market is. But I really want to share like 4 or 5 stocks that I really like for March. But obviously, I just bought AMD. Oh, and I bought Amazon today. I'm sorry. So I bought Amazon, Google, Elf, Target, and AMD. So I bought 5 stocks today. None of them are new positions, but I do like all of them for different reasons. Amazon went under $200. I could not buy it. That's a fully built position. That's another sleep easy at night, just like Google. So when I see those opportunities, like I'll continue to buy them, and I'll tell you basically what weights, but like the Amazon one was like a 2% add to my position. So, like I said, I don't like going over really 10% on any position. So it's kind of what I got. If you guys like this video or like my thoughts on the market, make sure you subscribe. I'm really trying to get to 1,000 subs this year. So I've got two subs in the past week. So thank you so much. I know that's not a lot to most people, but I'm going to try to be more consistent. I've been doing great this week. I know it's only been a couple days, but yeah, that's kind of my thoughts on the market. And I love volatile markets. I love when corrections happen. It just brings massive opportunities. With market at 52-week highs, it's great, but it gets a little boring because you're like, oh, I'm just gonna wait. And then things always happen, and then you can kind of really take advantage of it. So that's kind of my thoughts. Till tomorrow, peace.